I don't know if it's morning or afternoon, wherever you're joining us from, but I hope everyone's having a great day so far. So thank you for joining us today for our webinar regarding the Coronavirus Aid, Relief, and Economic Security Act, otherwise known as the CARES Act. So welcome, everyone. Very excited that you're all here today. I hope everyone is staying safe and healthy and hanging in there. I know this is a heavy time for everyone really across the globe. So I hope that our presentation today can just provide some insights, hopefully some reassurance, and perhaps alleviate some of the heaviness we're all feeling with this current situation that seems to be evolving every hour. So just to introduce myself and our presenters today, I am Anna Barham. I'm the Director of Marketing here at Out of the Box Technology. For those of you who don't know, we are a financial services technology software company located here in Portland, Oregon, where headquarters are, and we have locations, clients across the nation and then also across the globe. So today we have joined forces with our banking partner who you see on the screen here, Bank United, to bring this content to you guys today. So I just want to introduce our presenter, Ryan, who is a senior SBA Business Development Officer at Bank United out of Michigan. And we're connected with Ryan through one of our co-founders, Lisa McCarthy, who is also based out of Michigan. Ryan has been a trusted banking partner of ours for a while, and we're really excited and grateful to have him here with us today to share his knowledge regarding the CARES Act and just the implications of this for your small business. So Ryan brings nearly 20 years of lending and business experience to every client relationship, specializing in direct SBA lending and small business lending. So with that, I will turn things over to Ryan so he can dive into his presentation, and then we'll finish up with some Q&A, which we have teed up from the form that was filled out originally when you guys all registered for this webinar. So Ryan, I will turn it over to you.
Thank you very much, Anna. Thanks for the introduction. Good morning or good afternoon, depending on wherever you are in the country. We're at that middle of the day point. It's 1 o'clock out here where I'm at. I'm hoping everyone's staying safe, staying inside, and not and practicing social distancing. I know I'm working from home, so I apologize in advance if you hear a screaming 6-year-old running by my office. That does happen from time to time, so I will apologize now if that does happen. I do want to start by stating we will be talking about the CARES Act more specifically than some of the other products, mainly because that is the most recent and newest loan product that came out of the SBA. It's an SBA/US Treasury product administered by the SBA, funded and helped by the US Treasury. But of course, all banks must and are being required to participate in this in some sort of capacity where they can. Going on to the first slide. Next slide, one after that. Good, so this is kind of a broad overview on what's available to you right now. In the first column, the Economic Injury Disaster Loan, also known as the EIDL, is being administered by the SBA directly. So this is something that you would need to apply directly with the SBA. This is different than the P3 program, the Payroll Protection Program, which I'll get into in a minute, because this has been around for a long time. This was initially started after Katrina ravaged New Orleans, and businesses were put out for quite a long time, and there was a lot of disaster down there physically and with the enterprise and commerce. And this was set up to help businesses get back open, rebuild, and start serving the community again, as it is now. The qualifications for the EIDL is that you have to be in a disaster zone as declared by your state. So pretty much right now, almost all 50 states, I want to say the majority of them at least, are in a state of emergency, so they would qualify. There is a list of states on the website. The website for the EIDL is disaster.sba.gov. And you can go on there right now, apply for a loan. We just got some new information there's some misinformation out there regarding this loan product. If you've already applied and you clicked on the box for an immediate $10,000 advance, please note that this is an advance and not a grant. This is a loan and not forgivable. This can be used in conjunction with the Payroll Protection Program, but it may not be used for the same same purpose. Can't use the proceeds for the same purpose. They must be different, must be accounted for if you are ever audited or come back to prove that you used them for eligible purposes. With that being said, that $10,000 advance is now being defined as a up to $10,000 advance, and the SBA is going to begin advancing on that next week as $1,000 per employee as you had completed out that form up to $10,000. So I know a lot of my clients that went and applied for the EIDL. They had 2, 3, 4 employees, and now they're excited because they're expecting a $10,000 loan to come through, advance on that loan to come through, and well, it's going to be $3,000 to $4,000 depending on how many employees you state that you have. The underwriting process has changed dramatically for the EIDL. We are unsure what that means or what the underwriting process is. What we do know is that it will take 3 weeks to process and get you through to an underwriter at the SBA to determine what your loan amount would be and what you are eligible to use it for. Remember that a disaster has to be proven. So if you're a essential business and you are just rocking right now, doing phenomenally, you may not qualify for an EIDL loan because you're doing well. But if you are like many other businesses out there in the country, whether you're a gym, restaurant, hospitality, you are probably suffering some significant hardship and would qualify. What we do know is that the terms for the EIDL are 30 years and at 3.75% with all payments deferred until the end of this year. So that is good news for those who do need some capital, some operating capital. You cannot use this to refinance existing debt. So I apologize if everyone with high interest debt was looking to consolidate and get great terms through the SBA. This is just for what the true sense of the word short-term working capital, i.e. you can make your payments, you can pay for insurance, you can pay for rent, you can pay for just about anything except for consolidating debt. You can even do some expansion if you had started a project, a construction project, and it's not finished because of financial hardship, then you can utilize these proceeds to help build out your plant. You can use it for equipment, you can use it for inventory, anything of that nature. You'll just need to wait patiently to be contacted by the SBA directly for an underwriter to get through that process. That's a pretty broad overview. There's significantly more information on the government's website. Again, that's disaster.sba.gov. Now, moving on, where we're going to talk a lot more specifically at the Payroll Protection Program, also known as P3, does have a couple different facets to it. There is a subsidiary built in for certain loan payments. As it is right now, we are still, as a bank, as all banks, trying to figure out how the payment from the SBA is going to work. They are promising and have written in that the SBA will pay 6 months worth of existing and new SBA loans on the bank's books. So if you or any of your clients out there already have SBA loans and you're waiting for the bank to have the SBA start paying for them, the SBA stated that it would start April 1st, but the majority of banks out there in the country still have no idea how to obtain those funds from the SBA because the SBA has still not given them direction. So be patient, work with your lender. They're trying to figure out how to obtain these monthly payments. The good news is that the payments are being made. So the interest is not accruing. They're not kicking the proverbial can down the road and adding more payments onto the end of your loan stream. The SBA is actually making the P&I payments for you on those loans. And that's on new loans too. If you're an essential business making an acquisition or getting any type of existing 7A financing through the traditional SBA means, and you close before September 30th of this year, then you also qualify to get those 6 months of payments made for you. So the payment protection program that everybody's abuzz about this week and last week that they're still waiting for banks to start dispersing has to do with protecting your payroll, paying your employees, paying yourself if you're self-employed. And so we've received a lot more information regarding this product this week than we were let on beginning of the last week. So that's where we'll kind of start on this here. If you can go to the next slide, please. Thank you. This is designed to provide up to $10 million. Any existing SBA eligible business can apply for this. If you have an LLC that owns a bunch of investment properties, I'm sorry, you do not qualify. This is strictly for business going concerns. This is strictly for operating businesses. Now, if you're an operating business operating out of real estate and you have an LLC that also owns that real estate, it is still just for the operating company to pay rent to that LLC that owns the real estate or landlord, but also to pay for the payroll. This is to encourage all businesses to keep people on payroll. This is a loan. I want to reiterate, this is a loan. The initial structure is going to be set up as a loan. I'll get into the payment terms here shortly, but this is a loan that if you meet certain qualifications, which we will also get into here shortly, this loan may be forgiven. So that's why a lot of people are running to it. They're calling it free money. They're calling it tax refund, whatever you want to call it. It's a loan. Make no mistake, it is a loan. And I do want to mention that if you applied for the EIDL loan and you requested proceeds that are going to be eligible under this program, you can't use them for both. I want to reiterate that if you try to use loan proceeds under EIDL, that will reduce the amount of your PPP loan that you are able to obtain. And please note that while in this process, they may not be talking to each other, they will find you out, cross-reference, and come back to you probably sometime next year if you do try to use them for the same proceeds. So please keep that in mind. The Paycheck Protection Program is being administered by banks. About 95% of all the banks in the country are currently only servicing their existing customers. Because this is such a significantly cumbersome process, it's new, and it's requiring banks to build a brand new application, documentation, closing and funding process, and monitoring process. They only have the bandwidth to handle their existing clientele. Unfortunately, because of the amount of investment banks are going to have to make to get this program up and running, there is a significant amount of credit unions, community banks, and even Wells Fargo have opted to not participate in this program because of the strenuous circumstances that they are forced to be placed under in order to be able to administer this program. There are some banks out there that are taking non-existing customers. I've heard rumors. I really don't know of any at this point. I know Bank United, we are just servicing our existing customers right now because we want to make sure that our existing customers get their money in their hands as soon as possible. Next slide, please. So let's talk about eligibility. The main focus on eligibility is you have to have less than 500 employees. Pretty easy to meet. Otherwise, if you are over 500 employees, the SBA does have a size standard. If you meet one of those size standards, you will also qualify. What's really nice about this is 501c3s or non-for-profits, religious organizations typically do not qualify for SBA loans. They opened up this payroll protection program to those 501c3s with 500 or fewer employees. You can, your churches, your synagogues, or temples, they can all qualify, go to the bank they operate with, and obtain these funds. Also, those who operate as a sole proprietor, independent contractor, or who is self-employed. I do want to pause there and let you know that those three eligible purposes there cannot apply for the P3 loan until tomorrow, April 10th, while all other businesses in the country were opened up to last Friday. That's the bad news. The good news is the majority of banks weren't able to get their stuff together until today. So most banks are just starting to disperse dollars today. I know we got an email this morning saying out of the 8,500 applications we have accepted and taken from our existing clientele, we've already dispersed about this morning 680 of those. So banks are dispersing as of today. We finally got the go ahead and the guidance from the SBA on how to do so. That is why it's taken so long. Veterans, 501c19s for veteran organizations also, as long as they meet the SBA side standard, can get these P3 funds as well. Next slide talks about allowable uses. You can use and I highly recommend you stick to these uses, and I highly recommend that you keep track of these uses. So the way it's going to be dispersed is if you get a loan for $100,000, they're just going to dump it into your account. They're going to ask for your wiring instructions, or if you're an existing customer, they're going to dump it in your account, and it's going to be up to you and your customers to monitor and make sure that every dime out of this loan is being used for one of these allowable uses. The main one, of course, payroll costs. Got to keep those people employed. You can also use for healthcare benefits, employee salaries, commissions, or similar compensation such as bonuses, interest on mortgage obligations, rent, utilities, and obviously interest on debt obligations, which banks really like. They want you to be able to still make your payments during these troubled times. Some of the different aspects on the next slide that are really nice and out of character for the SBA is that it's non-recourse. There is zero underwriting guidelines for this, meaning that when you apply, an underwriter doesn't even touch it. It goes straight to closing. So no personal guarantees, no collateral. They're not looking to take a second on your house, business assets, nothing. The interest rate, this is interesting because when they first wrote it, they said the interest rate was going to be 4%. US Treasury came back and said, no, it's going to be 0.5%. And then they all landed on 1%. So the interest rate is 1%. And on a side note, the reason why a lot of banks held off until this week to fund is the majority of the banks operate on a cost of funds of about 1 to 2%. So you're upside down right out of the bat lending this money out of your bank. The Federal Reserve decided to open up the discount window and allow banks to borrow these funds at 0% so they can at least get some type of a margin on these loans, which helped out tremendously. You do get payment deferral. So while it is a loan still, and there is a forgiveness provision, all payments are deferred until the end of 2020. So you don't have to make any payments. Once the payments begin, if you are not eligible for forgiveness, it must be paid back in 2 years. I want to say that again. It must be paid back in 2 years. So I do know of some large corporations that are getting the payroll protection program that are going to be eligible for $8 million. If it is not forgiven, they will have to pay that back in 2 years at 1%. It is 100% guaranteed by the government. So if it goes bad, the government will make the bank whole on these programs. But I do want to put out there that while it is a government guaranteed program, the onus is on the bank to ensure that they lent out the money appropriately. So another reason why a lot of this has taken a long time is the bank has to do background checks, credit reports, ensure that the individuals getting the P3 program are eligible, meaning that if you've had any losses to the government in the past, you are not eligible for this program. If you have any child support delinquent, you are not eligible for this program. Anything that would render you ineligible from a typical SBA program, with the exception of 501c3s, you will not be eligible for the program. So keep that in mind as well. Back due taxes that are delinquent with tax liens without a repayment schedule will not be eligible. Certification. The next slide, please. So with all that being said, it really leads into nicely to this slide. When you sign your documentation or when you apply, depending on how your bank wants to structure the documents, you or your client, the business owner, is going to certify that because of the uncertainty of the economics conditions, that you are requesting the ongoing business operations, meaning you're going to keep your business open. You're going to move forward with it. You are going to acknowledge that the funds will be used to retain workers and maintain payroll to make mortgage, lease, or utility payments. There are no other loan applications out there, meaning you're not, I can't tell you how many people are saying, well, I already applied with Bank of America. I'm apply at Chase, I'm apply at Huntington, I'm apply everywhere that I have a bank account. Don't do that. If you do that, there's just the SBA, because all the banks have to run these programs through their SBA E-Tran electronic transmission program. They will just wipe them all out and you will get nothing. If you apply at P3, I'm gonna say it again, if you apply for P3 at more than one financial institution, you will get nothing as they process it. During the period from February 15th through December 31st, the borrower has not, again, just kind of reiterating myself, making sure that you have not received any additional funds under the same program, because then you will be, both loan programs will be wiped out and ineligible for you altogether. Let's talk about the forgiveness limitations. So when I initially put this together, there were really only two tabs, two bullet points for this, the reduction in number of employees and the reduced salary and wages. We know a little bit more. Oh, oops, I did skip a slide. I'm sorry. Yeah, go ahead, one more. Sorry about this. So the loan amount may be forgiven, and it's changed a little bit, but not so much. So initially, when they came out, they stated that your payroll must be at least 75% at the end of June, as it was in February. Then they said it had to be 100%. Now they're saying that you must keep the same number of people on payroll. So if you had 10 people on payroll February 15th, you must have 10 people on payroll at the end of June. Now, the amount of the loan, you can use 75% of the loan proceeds must be used towards that payroll. So you could reduce hours, you could reduce pay, but you cannot reduce the amount of people that you have on payroll in order for this to get forgiven. So for an example, 10 people on payroll February, those 10 people must still be on payroll at the end of June in order for it to be forgiven. The second prong on this is that 75% of your loan amount must be used for payroll. So if you're eligible for a $100,000 loan, $75,000 of that must be used for payroll. The other 25%, again, can be used for your rent, utilities, insurance, and insurance means workers' comp and everything else. So while it's, I get this question all the time, the calculation for payroll, Ryan, does that include workers' comp insurance? Does that include medical insurance? Does that include, all these other benefits that you add to your individuals? Well, the proceeds, yes, are eligible for that. The calculation, no, is not eligible for that. And the way the SBA is defining it is they're really giving it to the bank, and they want the bank to either utilize the IRS Form 941 or IRS Form 940. It is up to the bank to determine which one it is, but they strictly want it as actual W-2 income paid out on an average over the last 12 months. So that is not going to include your insurances, your medical insurances for the calculation, although that 25% can be used for that purpose. Now, with the tax liability for the forgiveness, another thing I get asked for all the time is, hey, whenever you get any type of loan canceled or any type of indebtedness forgiven, usually you get taxed with a income tax at the end of the year, a 1099 miscellaneous. That $100,000 that was forgiven is now income. So that does not fall. That they've written a special provision that no, you will not get taxed on that forgiven portion of the loan. Any loan amount, again, that's not forgiven at the end of the year, 2-year term at 1% interest. Next slide, please. The limitations on the forgiveness, the reduction in the number of employees, and reduction for reduced salaries and wages. So remember, can't reduce the number of employees. Got to have the same employees. That's as we understand the rules this morning. They may change that because they've been changing these rules, no joke, sometimes hourly. They've come out, and it just depends on how loud the business owner, the banks, whoever is utilizing the program is yelling at the government, because the government's making changes constantly. So heck, in another month, this slide may be rendered useless, unfortunately. But you can reduce salary and wages if you want. You just cannot do reduce the number of employees. If you reduce the amount of salary and wages, it cannot drop below 75% of the use of proceeds. Again, how do you apply for a loan? Must go through the bank. You must go through your financial institution or another financial institution, anybody who is participating in this loan program. Unfortunately, for some business owners, they may not find a home because their bank's not participating. If that is the case, the SBA is attempting, again, the key word is attempting, to open up a portal where you can apply directly to the SBA. And that's why this is an SBA and U.S. Treasury dual function, because the SBA may be taking applications to fund this directly. And I will say that again, may. They're talking about it because a lot of these big banks and a lot of the small banks are opting out of the program and leaving a lot of business owners without access to this capital. We have no guidance on this. Nothing has been made definitive, nothing of the sort. If you want an idea of what the application looks like, there's the website right there. I don't recommend that you fill that out and send it to your institution, because the majority of institutions are creating their own online application to streamline the process. They want no paper, because paper gets lost, paper gets deleted, paper gets moved from file to file. They want it all electronically submitted, accepted, and funded. So you can go to this website, take a look, see what they're going to require, but no way do I recommend that you fill it out, download it, and send it into your bank, because more than likely they're just going to kick it back and say, here, go to the website and fill it out here. So you'll just be doing double work. Be prepared to provide that documentation that we talked about before. Again, it depends on the bank. From what I understand, Bank of America is requesting a 940. I know my bank, Bank United, is requesting a 941. So some banks are requesting one tax form, some banks are requesting the others. We are still unsure, even though self-employed, sole proprietors, and contractors are going live tomorrow. We're unsure what forms we are going to be utilizing for that program. So don't be surprised if that doesn't get delayed. Or while it's open tomorrow, don't be surprised if the funding doesn't get delayed, just as the original P3 program was delayed from last Friday until today/tomorrow. If you have any additional questions, concerns about this product, how to get involved in it, contact your financial institution, contact your CPA or accountant. Most of them have already contacted financial institutions to get some guidance on it anyway. So what will the lenders be looking for? They want to make sure that your business was in operations on or before February 15, 2020. This is highly important. So if you bought a business or started a business February 20th, I'm sorry, you're not going to be able to qualify for this loan. You must have been in operations before February 15, 2020. But you will qualify for the EIDL loan. So if you can't get in on the P3, you can always get in on the EIDL. Still a great program, still great terms, interest rates, and underwriting process. Here's a nice 4-bullet checklist of what lenders will also be asking applicants in good faith certification. Again, you will be certified to the federal government and to your bank that everything that you have submitted is true to the fact and has not been doctored, altered in any way. I can't stress enough how when society gets in a situation like this that they panic. Fear sits in, and they want to try to get as much as they can, even though it's above and beyond what they're truly eligible for. Government will crack down on this. The Office of Inspector General, probably a year from now, is really going to be looking into any of these defaults, any of these individuals that the requested loan amount that they got, does not jive with the 940 or 941s that they filed with them. So please, whether it's yourself or any of your customers, make sure that they are as honest as possible and they utilize the form and the process that the bank has given to them. Otherwise, the Inspector General and the IRS is going to be breathing down their neck for fraud, and they don't take these things lightly. They take them extremely serious. If you're an independent contractor, sole proprietor, or self-employed, as I said before, they're going to be looking to apply tomorrow. We still don't know exactly what we're going to be using, but the payroll tax filings, your 1099 miscellaneous, and income expenses could be used. I can't stress enough that you must have proof of all these uses of your, sources of your funds to come up with the dollar amount. Because if you do not, they are going to come down on you hard. So keep your 1099s, keep your 940s, make sure you base your loan amount and off of those forms and those forms alone. Please ask your clients not to get cute and add a little bit here. Oh, I thought we could add this. I thought you could add that. Just calculate your loan amount based on what you can prove via tax forms, because that's the way the SBA works, is they must have verifiable proof through tax forms. And that's pretty much it. Covered a lot, said a lot. I'm going to take a drink of water here, break for a minute.
Thank you, Ryan. Can you hear me okay? This is Anna
Yes.
again. Okay. Thank you so much. That was super helpful and informative, and I feel like you communicated that in a way that makes sense to people who may not have that understanding from the bank and financial side. So that was awesome. Thank you. So I wanted to move into some Q&A. Anyone that is joining us today has filled out a form and sent in some questions prior to the webinar, but then we also have some live questions that people have typed into the meeting. So I'm going to run through a couple of those and give Ryan the opportunity to speak to some of those. I think you've probably covered most of what we're talking about. These are a little bit more specific. So I'm going to dive into those, and then Ryan, you can provide some answers and clarify anything that might be confusing to people, and then we'll wrap up from there. So one of the questions that I thought was a good question that someone had thrown out there before the webinar that I think kind of was answered, but we could use some further clarification. So I know that keeping the same number of employees is obviously a requirement. But one of the questions we got was, do I have to pay back that loan if the employee finds another job? So if an employee leaves on their own terms versus, letting someone go, can you clarify that as far as the loan goes? Does that make sense, that question?
It makes complete sense, and that's a great question, because that will happen. I mean, this is 2.5 months away from where they're going to make the determination whether it's forgiven or not. And obviously, we don't have control over what our employees do or where they go or anything remotely responsible. I really don't know the answer to that question. I would imagine that there's got to be some type of built-in grace for if that does happen. And I know the lender will want to get proof of the employee leaving. I know that's what I would do if I were wearing my underwriting hat. I also do know that 100% of the forgiveness requirements are not out yet. So those rules may change before the end of June, depending on how successful this program is and depending on how well the public is responding to it as well. So that's a great question. I would just try to keep as many people on payroll as possible. Utilize your common sense and taking care of your employees. But if they leave, they leave. There's really nothing you can do about it. Doesn't mean you have to go out and hire somebody right away, because there's got to be some type of built-in grace for that. So if somebody leaves, that's a great question.
That makes sense. And I think from like a business owner standpoint, it would make sense to just, move forward with the loan and the application and then address that, like cross that road when you get there, because I'm guessing that it'll be something that comes up through the application process or whatever it may be. But I would still move forward with it. Is that kind of what you would concur to?
Yeah, I do.
Okay.
Because the final forgiveness rules are not set in stone. So still go for the product, apply for the product. I encourage anybody who has employees to apply for the product, including yourself,
Okay.
if you consider yourself an employee.
Okay. And another question that we can kind of lead into from what we're talking about now that came up live was, is it and you may not know the answer to this, but we could probably think through it. So let's say you have 75 employees and someone leaves, and then you hire somebody else. So your number stays the same, but the people who are working there, the employees themselves, are different. Would you still qualify for the loan?
So it's not, you don't have to keep the same people on payroll. You just have to keep the same number of people on payroll. That's how it is currently.
Okay. Okay. And then another question that is somewhat open-ended, that you might be able to provide kind of just from your own experience and background, and then, as this loan has come up and your understanding of disaster loans as they historically have been put into place, is how can we best leverage the use of this loan, which is, it's kind of a general question, but I thought that was kind of an interesting thing just to get your 2 cents on that.
Sure, utilize both programs. I'm encouraging my customers to go for both programs. The P3, you just got to keep those buckets for what you use those programs for completely separate. So the P3 program, definitely apply for your payroll, for your employees' payroll, for rent, utilities, anything that you can utilize that program for based on the loan amount you're qualified for. Any hole in those funds, anything that's not accounted for, any projects you're currently working on, inventory that is needed that you don't have the working capital or the access to capital to fund, utilize the EIDL loan. Use that for the different purposes. But remember, like I said, keep the receipts and keep the proof of what you used it for. So if you have a manufacturing facility that has a very high utility bill, uses a ton of energy, well, the payroll protection program probably is not going to have enough funds for you to cover all the utility bills that your building is going to be utilizing. So go and get the EIDL to cover the utilities and utilize the P3 for the other eligible purposes. Or if you need repairs and maintenance for your equipment, EIDL is perfect for that. Things that are built into your variable and fixed overhead that just cannot be used, or you just don't have enough money built into the P3 loan to cover. So that I definitely recommend people getting both products.
Okay. A question, just a follow-up question that we received live that I think kind of is related to what you were just talking about. I think the answer is yes, but would telephone and internet costs be considered and classified as utilities
Yes.
for the purpose of these loans? Okay, that's what I kind of thought, but I just wanted to clarify. Okay. Another question that came up live was, if I end up not needing the full loan amount, can I pay back, or do I have to pay back what I don't use?
That is an excellent question as well, because while our initial understanding is no, you don't have to pay it back if you don't use it, just be sure you keep the receipts when it comes to your actual payroll, because that is what they're gauging everything on right now. So again, I'll use nice round numbers. If you are qualified for a $100,000 P3 loan and you at least use $75,000 for your 10 employees that you've kept on, from what I understand from the rules today, they don't care about that other 25 grand. As long as you used it either then or in the future for rent, interest, or whatever. So if it takes you another 5-6 months past the June date to use it for your rent, then that's fine. As long as you use it for eligible purposes, you can use it whenever you want. It's that payroll portion That's really, really important by June 30th.
Okay. Another really good question that I was kind of wondering too when you brought up the fact that Wells Fargo is not participating in this. So the question is, if someone is banking with Wells Fargo or is using Wells Fargo, I guess, as the lender, what should they do if they're trying to apply for a loan? Do they have to open an account with a bank that is participating? I'm guessing.
That's another great question. From what I understand from the banks that I know that are participating in this loan is that you've had to have been a customer with them since February 15th in order to participate in it. Now you've got to think about it. Banks like Bank of America, I think, received 85,000 applications just in the first weekend. So they've got a ton of customers and a ton of loans to get through. There are banks out there that are participating in the P3 program for non-existing customers. I don't know them off the top of my head. I've heard rumors thrown around about different banks. I would probably recommend going through the top 20 SBA lenders in the country. Start with them first. Start from number 20 and work your way up to 1, because obviously if they're number 1, they're a heavy hitter and they're probably only doing their existing clientele. But start with 20 and work your way up, because there's got to be some type of lender out there that is doing non-customers, because these products are still somewhat profitable. The SBA is paying the banks to utilize them now that they got the interest rate parity squared out. They're paying the banks up to 5 points to get the money out the door. So if you're a smaller lender or a smaller bank and you're nimble and can take on an extra clientele, they probably will to make the extra 5 points on some of these smaller P3 loans.
Yeah, that makes sense. I think what would be helpful too for people is we can follow up with kind of a resources list too for what those top 20 lenders are through the SBA. Another thought from if I'm a business owner and I have a CPA that I'm working with, I would probably ask my CPA for a referral because they're going to be in the loop with the banks that are participating in these loans and already have those established relationships. If your bank, whoever you're banking with is not, say it's Wells Fargo, is not participating, that would be my other recommendation. So.
And here's another recommendation as well, another resource that I just dawned on me. Go to your local SBA office. Reach out to your local SBA office. They will know what banks in your area are taking on P3 loans for non-existing customers. They will know.
Another question that came up, and I don't know how many people on the call we have who are working out of their homes or don't have an established, location for an office and aren't paying rent or leasing out an office space. So for those of you who are working out of your home, and the question was, does the loan cover the mortgage payments? Which is an interesting question. I don't know the answer to that. Go ahead, Ryan.
The short answer is no, but the long answer is a little bit. So you want to talk to your CPA, your tax professional. Talk to them and find out how much they have allocated towards your home, your business use towards your home. Because there's a formula that they use in order to be able to write off expenses for rent, expenses for interest, and all this other stuff through your home. I would definitely say don't use it to pay your mortgage, because that is definitely not eligible. But there is a small percentage that your CPA will be able to give you that you could use towards your quote unquote home office.
Okay. Another question was, so let's say I'm, a small business owner and I have to lay 2 people off or however many, but I can bring them back in 3 weeks or so because I'm able to pay them. How does that work? If I guess it's a timing question as far as when you're applying for the loan and you lay off but bring people back. So technically, let's say we didn't decrease the head count.
Right.
How does that factor in?
The way the rules are currently written, and that's why I'm going to say exactly what the rules are written, is that you have to have the same amount of employees at June 30th as you did February 15th, and
Okay.
that 75% of your loan must be used for payroll. So I don't recommend you trying to find large loopholes, but that definition does allow for some play in between them.
Okay. Okay. Another question is in regard to 1099. So the specific question was, as an agricultural business, we did not use our 1099 payroll on this application. Could we have used that payroll?
Yes.
Okay.
So if you already applied, did not utilize your 1099 payroll, I would go back to your lender and ask them if you can adjust your application.
Okay. Another question from the live questionnaire. So I included a part-time employee in the number of jobs on the application, but now see FTE employees referred to under the forgiveness information. So for part-time employees, is that included in forgiveness? It's a good question.
Yeah, it is, because they keep changing that definition as well. Initially, it was all employees, and then beginning this week, they changed it to full-time employees. So yes, it would only qualify for full-time employees from what they are stating, but your loan amount, again, is going to be based off of your 940 or your 941 tax form. And obviously, your part-time employees are going to be included in that for the loan amount. So if I'm reading it right, you're kind of covered both ways, that the head count only covers full-time employees, but the loan amount includes all payroll.
Okay.
So you see this play in there as well.
Okay, and then we have a confirmation type of question. So this is to clarify. So if I have one employee, I will receive $1,000 through the EIDL program, correct?
As an advance. So
Okay.
the EIDL program takes about 3 to 4 weeks to process your loan, underwrite it, get it through, make sure you're eligible, and then disperse. But they're letting, because people need the money now, they're allowing up to a $10,000 immediate advance. That'll happen within a week of you applying for the loan. Now they changed the qualification that it's up to $10,000, and you're only going to be advanced $1,000 per employee that you put on that application.
Okay. Question about the time span of when you can actually use that loan money.
When? For the P3?
Yes.
You can use that loan money immediately. As soon as
Okay.
it touches your bank account, you can start using it.
Okay. Advertising costs, so Google, SEO, those types of costs, do those count as costs you can include on your loan application?
Not for the P3, but for the EIDL, yes.
Okay.
So as you can see, that you can apply for both of them. They can work very well together. Just don't overlap them with the uses.
Okay. Okay, and then as far as approval, as a rough estimate, do we have any idea for how long it will take the bank to approve the PPP loan?
It depends on the financial institution. Like I said, banks like Bank of America, they haven't dispersed a dollar yet because they're so inundated with trying to figure all this out. Whereas banks like ours, like Bank United, we started dispersing this morning. We're a smaller regional bank. So I would assume that some of the smaller banks, while they may not be technologically advanced, they do have the nimbleness to be able to move quickly and deploy the capital quickly.
Okay. So this is a good question. And so if like an employee, if their hours are reduced, so let's say 20 versus 40, and I know we talked a little bit about part-time employees versus full-time employees. How does that impact the loan application if someone is working less hours or a reduced number of hours?
Okay, so that's a great question. I do know the answer to that. So most banks, the way that they're calculating your loan amount is they're taking 2019, your average monthly payroll for all of 2019, multiplying it by 2.5, and then utilizing that as your loan amount. And then they're verifying that amount by utilizing either your 941 or your 940 tax forms. All right. So if you've recently laid some people off or you've cut their hours back, that's fine because they're utilizing last year's numbers as your payroll base for your loan amount. So once you start getting that money, you can either start paying them back on the regular 40-hour-a-week that they were getting paid, keep those people on staff. Because remember, you have to have the same amount of people at June 30th as you did February 15th, and you have to utilize at least 75% of those funds that you were lent towards payroll.
Okay. Another clarification, and I think we may have touched on this already, but here's the question. I'll just read the full thing. So are you suggesting that if I start with 50 employees and end with 49, that the entire loan may not be forgiven, or just the amount for that one employee?
It's very possible either way. It really is, because that's the way that the rules are written today. That they're assuming if you've got 50 employees at February 15th and you lose 2 and you've got 49, that you needed those 50 employees, so you should have hired 2 more.
Okay.
Now, if they're looking at you and they say, all right, on January 30th, you have 49 employees because that 50th employee quit the day before, it's going to work differently than that, because remember, they're utilizing your 940 tax form to kind of verify a lot of this stuff. So, and those are quarterlies, and that's why they chose June 30th, because you'll be able to get your second quarter. You'll have your first and second quarter 940 and 941s at that time.
Okay. Another question about salaries. So calculating an employee salary, should bonuses be included when you're calculating what employee salaries are?
Yeah, if you pay them through your payroll, if they're reported on your 940 and 941s, absolutely.
Okay. Okay. So
And
if you qualify, oh, go ahead, Ryan.
I do want to go back and talk about that forgiveness. So when I say June 30th, that doesn't mean that July 1st, they're given immediately. The banks are going to need a while to make these calculations, verify it, ensure the SBA has the rules right and that they're following them correctly. So don't be surprised that if that June 30th comes and goes, July 30th comes and goes, and your loan still hasn't been forgiven. Remember, they deferred all payments to the end of the year because they know the banks are going to take a long time to go right back through this whole entire process again, validate and collect a lot of information to ensure whether your loan can or cannot be forgiven.
Okay. Another question that came up, I don't fully understand this question, but maybe you will, Ryan. If you qualify for PPP, do you need to use 75% for payroll by June 30th?
You need to, yes. So yes, you need to use 75% of those loan proceeds by June 30th. Now, I anticipate them to change that because they were trying to get all this money out last Friday so that you had the full 2 months to be able to do this. But since most people aren't getting their money until tomorrow or sometimes even next week, you would assume that they're going to kick that June 30th date out to maybe July 15th.
Okay.
So again, some of this stuff is changing. It's kind of fluid right now when it comes to that end date, but as I can only answer the questions as they are currently written. And as they are currently written, 75% of that must be used for payroll by June 30th.
Okay. So this is an industry specific question that I'm hoping to kind of phrase in a way that will apply to more people than just one. It was specific to like a trucking company, but that could apply to different companies that are similar with expenses and how you categorize those expenses, et cetera.
Right.
So do the funds cover maintenance or fuel costs? Maybe you can, touch on some other companies that or types of businesses that might relate to as well.
This is great because I love trucking companies. I specialize in finding FedEx contractors, whether it's line haul or P&D. I do probably 50% of my business in that area. So I love this question. The payroll protection program, no, will not cover that. The EIDL program will cover that. So the EIDL will cover your maintenance costs, your fuel costs, any other fixed or variable overhead that is utilized for your business. But the payroll protection is only going to cover your payroll, insurance, interest on your loans, and utilities and rent. Now, I do want to say, while we're on the subject of trucking, it really depends on how your trucking company is set up, what you can utilize for payroll, right? Because a lot of trucking companies 1099 their employees as contractors. Now, those are eligible. You're 1099ing these individuals, so they're eligible for their payroll. But if you are leasing your trucks to individuals who are getting paid directly for the shipments and not directly through you, meaning you're more of a broker than you are an actual trucking company, they are not eligible. So know the distinction and know what area of trucking you're in.
Let's see here. We've got a lot of questions here that are somewhat overlapping, so I don't want to ask the same question twice. So I'm just kind of running through these. Give me a minute.
Sure.
We have a question about a nonprofit homeowners association organized as a corporation but owned by its members. Would that type of business structure qualify?
As long as they're formed as a 501c3.
Okay. Related to that, so can owners of an LLC use the PPP loan?
Yes.
Okay.
Now, well, the answer is yes, but what is that LLC used for? Because some people think LLCs are only passive companies. They're only real estate holding companies or passive companies. If you're a passive company, you're not eligible. If you're an LLC and you are an operating company, my wife's company is an LLC, and it's an operating company. It has staff, it operates, it payroll and expenses and everything, so it's eligible. But I also have an LLC that owns some rental properties. That is not eligible.
Okay.
But if you have an LLC that's a management company, it is eligible. So it really all depends, and it would have to go through the SBA's eligibility for all 7As. So if you were to go onto the SBA's website and click on, well, what's eligible for a 7A, taking out the whole not-for-profit stuff, that will determine whether your LLC is eligible or not.
Okay. And then kind of a general question that maybe you can provide some, 10,000-foot view for our audience. But what would cause a loan, not to be forgivable?
If you don't follow those ratios, as I mentioned, if you don't utilize, if you use 50% towards payroll instead of 75, if your head count goes from 10 employees down to 7 on an average over that time, however they decide to redefine the employee head count, you would not get it forgiven, and you would wait until the end of 2020, and your payments at 1% over 2 years would begin January of 2021. Other reasons that may disqualify you is fraud. If somehow during that period you get back your taxes are in arrears, if you get tax liens, if you commit a felony. I mean, there's a short list, but it's out there of what may disqualify you during that process for forgiveness.
Okay. All right. So I think we've kind of run through all the questions, and we're coming up on the end of the hour here. So I want to be respectful of everyone's time.
Sure.
Before we wrap up, Ryan, did you have any kind of final thoughts or recommendation or advice for people moving forward? I know this is a pretty wild time, so I want to make sure that we're providing the resources, next steps, et cetera, for everyone. And I'll do a quick wrap up when you're done, Ryan.
Sure. Any questions specifically that weren't answered here, if you need clarification, I encourage you to get a hold of someone from your bank. Whoever you are applying your P3 loan through, they are going to be the resource. The majority of these financial institutions have set up a centralized processing system and a centralized communication system, meaning that I know I don't have a lot of the answers for my clients, so we have a specialized inbox that all of our clients can go through, and they get an answer within an hour to any specific question that they have on the application, the process, or where they are currently in line. Some banks are a little bit more technologically advanced where you can go onto their website and know immediately where you are in the process. It just depends on the amount of technology that your financial institution is utilizing for the P3 program. But I implore you to please go to your financial institution first. Your tax professional also will probably have a lot of information. Your attorney, a lot of these professionals that deals with businesses, attorneys, payroll specialists, especially payroll specialists, and tax professionals, they are putting their ear to the street. They're finding out as much information that they can because they want to ensure that they are servicing their clients as well. So utilize the people that you know, utilize the professionals that you do business with, lean on them and see what their recommendations are, because depending on your specific business and the specific course of your trajectory of your business, your professionals may have different recommendations than what I'm recommending. So please utilize them first before anybody else. And that's my and then the only other thing I would recommend is that if you are realizing some tremendous hardship, lean on your other business owners that you know. Be innovative. These are unprecedented times, calls for really innovative thinkers. Lean on your fellow business owners, lean on your fellow professionals, and be innovative. Go out there and try to figure out something new during these times, because I have a feeling it's going to take a long time before we get back to normal, regardless of when this whole COVID-19 is eradicated. And that's it.
Yeah, that's great. That's great advice. Yeah, I'd just echo that too. It's from our business standpoint too. I think we're trying to find innovative ways to find the silver lining and look to industries that are getting slammed right now, because not every industry is going out of business necessarily. The healthcare industry or ancillary related industries are getting blown up. So I think just to echo what you're saying, Ryan, to be innovative and inventive and try to look at different ways that there is a need for some things out there, and trying to figure out how your business fits into whatever those needs are and meeting that demand. That's definitely, my goal with Out of the Box from a marketing standpoint, just trying to find those different ways we can continue to help people and serve people that, will hopefully keep us running as well and sustain our business. So yeah, that's a great perspective to have. So just to follow up, we'll be sending out the slides and the recording for this webinar today. So, just check your inbox. You'll be receiving that. And then if you have any questions, please feel free to just give us a call directly, and we can help guide you through the process or provide resources or referrals. We are here. This is part of what we do, is help guide people from a financial standpoint and technology when it comes to your financials. Email us at the email we've set up specifically for this topic. We'll get back to you as soon as possible. But we are here to be a resource. I know Ryan is as well, and is happy to answer any more questions that you might have. But we just want to be a resource for you guys. So that kind of concludes our webinar. Thank you so much for taking the time out of your day to join us. I really hope that everyone just continues to hopefully stay healthy and safe, and just hoping for the best that this starts to die down a little bit as we move forward. So yeah, thank you so much, and I'll kind of end there and hope everyone has a great day. Again, check your inbox. We'll be sending this out as a follow-up, and we will talk to you later. Thanks so much, everyone.
Thanks, Anna.